Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in a narrow range, and the main question today is whether the market is going to put a breakout beyond 2668 to set fresh all-time highs, given that the buy side has been quite dominant over the last several days, and in the overnight session, the market has been balancing very close to the all-time high. As long as we're seeing broad market strength and sustained upside momentum, we could get a breakout to fresh all-time highs, and then beyond 2668 there is no hard resistance. But based on the range expectation, in the event of a successful breakout beyond 2668, the market could reach 72.5 to 74.5 and the 77.5 to 79.5 area. Now, the other thing we have to keep in mind is that the FOMC meeting announcement is due tomorrow afternoon, and typically the day prior to the FOMC announcement, the market has a tendency to be fairly range bound and balance within a range. So we are going to have to determine the situation in real time and assess the level of strength that we're seeing on the breakout beyond 2668, because we could just get a marginal new high and then balance within a range. And that's why even in the event of a successful breakout, the 72.5 to 74.5 area could be a good place to take profit. On the downside, we have the overnight low so far at 63.5, and holding above that level and continuing to consolidate could eventually lead to a breakout attempt beyond 68. Below the overnight low, we have the initial support zone at 58.5 to 60.5. That is an area where buyers can be active, but we're going to have to assess the situation in real time and make sure that we're not seeing excess weakness and a lot of downside momentum, because we have to think about the reward to risk at 58.5 to 60.5. In the event that the market is putting in a short-term breakdown below the overnight low and we're seeing excess weakness and a lot of downside momentum with the other markets sharply breaking lower as well, then even though we can get a response at 58.5 to 60.5, we have to question whether there is sufficient reward to risk to enter long there. So as long as we're not seeing any big weakness in real time, initial support is still an area where buyers can be active, and then we can start to balance within a range yet again and eventually return back up towards 67 to 68. Below initial support, we have yesterday's RTH low at 54.5 and yesterday's 24-hour session low at 52.25, followed by support at 49.5 to 51.5, and all of those are areas where responsive buyers can be active, especially at 52.25 and the 49.5 to 51.5 zone. And given that the market usually balances within a range ahead of the FOMC announcement, that actually even increases the odds of buyers stepping in at 54.5 or 52.25, and especially at 49.5 to 51.5. So overall, we could still end up with a fairly two-sided and balanced type session, but if we get a successful breakout beyond 68, then we can still hit 72.5 to 74.5 and then start balancing, or perhaps even hit 77.5 to 79.5 and then start establishing a trading range. So our short-term bias heading into the open is neutral. We are open to a move in either direction, but if in real time we are seeing underlying strength and we get a successful breakout beyond 68, then that short-term bias is not going to be neutral anymore. It'll flip to bullish, and that can lead to a test of the resistance areas above. And again, keep in mind that there is no hard resistance beyond 68, so those zones above are better used as upside objectives or profit targets rather than areas to short the market. So those are the main ideas heading into the open. Let's see if the buy side can maintain the recent control, and let's see how the market responds to 67 to 68. That will help set the bias and tone on the day, and we'll take it from there.